Trump issued 2 orders at the same time. Bitcoin rocketed to 117K. Others are madly chasing the rise. Smart DCA teach you how to reverse investment and bottom fishing. Ethereum becomes Bitcoin's favored son. While Bitcoin is left out in the cold, whales are dissatisfied and are secretly sharpening their knives. 1 million euros worth of Bitcoin requires a 12.5 million yuan stake? The EU's move is likely to make banks shudder. The US AI fights on 2 fronts. The military-industrial complex charges forward ChatGPT rear penetration. Mara has the most Bitcoin, so why has its market capitalization been overtaken by IREN?
Friday, August 8th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Yesterday, Trump signed 2 crypto-friendly executive orders, sending the market into a frenzy. The first directly addressed 401k retirement accounts, allowing them to buy Bitcoin. It also mentioned the need to redefine what constitutes an accredited investor, effectively allowing ordinary people to enter the market and not just let Wall Street have its way. The second was even more drastic, directly targeting choke point 2.0. Banks could no longer use reputational risk as an excuse to deny crypto companies account openings. Isn't this clearly clearing obstacles and opening up new channels for the cryptocurrency market? Consequently, we saw Bitcoin soar from $114,000 to $117,600, and Ethereum followed suit, surging to nearly $4,000. This wave of support was more than just a policy win. It was a complete package of services, delivering water, demolishing walls, and rolling out the red carpet. In the short term, the market may continue to be excited for a few days, but in the medium term, it still depends on how quickly the policy is implemented. When the Federal Reserve changes its tone will be the real test. Smart DCA. The smart fixed investment strategy is used to counter human nature. It relies on an indicator called realized price on the chain to tell you whether it is worth buying now. For example, the realized price in the past week to month is $117,700, while the current price of Bitcoin is only $11.6. The $10,000 range is just below this typical accumulation zone, making it a great time to start investing regularly and gradually increase your position. If the Bitcoin price ever rises back above $117,700, this strategy won't be rigidly held. Instead, it will automatically sell in batches, gradually locking in the profits you've already made. In other words, it helps you buy when the price dips and sell when it rises, helping you avoid emotional trading throughout the process. In short, Smart DCA is all about data, not sentiment. Buy when the market panics and sell when everyone's greedy. Relying solely on hard on-chain indicators for regular investment makes it easier to survive and maintain a stable position in the cryptocurrency market over time. Since June, Tron has been on a roll, minting $5 billion worth of USDT alone. The on-chain market is completely green, and the market is literally flooded with liquidity. The pace is perfectly timed. Every time USDT is minted, Bitcoin rises and liquidity explodes. So where does all this newly minted USDT go? Most of it goes to the Tethered Treasury, where it's then distributed in batches to ETF custodians, institutional accounts, and market makers, a standard high roller express lane specifically for large orders. Why are they all choosing Tron? Because it's cheap, fast, and has no traffic jams, making it a favorite among institutions. Macroeconomically, while the Federal Reserve didn't cut interest rates, it softened its stance. Coupled with positive employment data, market risk appetite has returned, naturally fueling the crypto market. Therefore, this surge in USDT, coupled with the rebound in sentiment, has effectively given Bitcoin a boost. Whether it can make a splash in the future depends entirely on Bitcoin's ability to perform. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member, receiving your membership code Monday through Friday. Trump just signed the Stablecoin Act, and the market immediately sensed an opportunity. Did you think Bitcoin was about to take off? It turned out that Ethereum was the first to trend. Ethereum has now become America's child. Since July, over 200 super wallets have been added to the blockchain, each holding over 10,000 Ethereum. Institutional investors and major players are flocking to the blockchain like they're scrambling for parking spaces. It's no exaggeration to call it a predestined candidate for America's underlying financial protocol. Meanwhile, Bitcoin, on the other hand, seems somewhat desolate.
That's a little different than Bitcoin, which has always been, we're going to be the base layer of trust where lots of projects get built on top of. And it's going to be so used by so many different industries and people that it becomes a currency itself.
While there are still 2.14 million Bitcoins sitting on exchanges, reserves remain at a historically low level, indicating no one is dumping the market and the coins are being held tightly. But what about price movement? Over the past week, there have been only slight fluctuations, not much of a significant impact.
And I think you're going to continue to see Bitcoin appreciate as long as we have governments that can't spend less than they take in revenue. And we're not even close to that. As long as that debt to GDP keeps climbing, you're going to see Bitcoin prices keep climbing.
The market is taking a wait-and-see approach. Some are beginning to wonder, is another ancient whale about to awaken? After all, every major market move always requires a certain air of mystery.
At Bitcoin block height 908992, a whale, dormant for nearly a decade, resurfaced and transferred 3,000 BTC on-chain, valued at approximately $350 million. Unlike recent whale transfers that have concentrated their assets, this address dispersed its funds across multiple wallets, possibly to reduce tracking difficulties or as a preemptive sell-off. This poses a risk of short-term market sell-off.
This whale has not only awakened, but also done so with a sense of ceremony. 3,000 Bitcoins were divided neatly into 30 wallets, each containing 100 Bitcoins, like lining up for a year-end bonus. These wallets have been in hibernation since November 10, 2015, when Bitcoin was only $336, and the entire batch of Bitcoins was worth just over $1 million. And now, at $120,000 per Bitcoin, $348.72 million has arrived directly to their accounts, a 34,548% return over 10 years. A staggering return that's better than a gold mine. Even more outrageous, this isn't the first whale to resurrect. A previous tycoon holding 80,000 Bitcoins successfully liquidated his entire holdings through Galaxy Digital, netting a total of $9 billion. Is this whale, operating through a separate wallet, also engaging in a warm-up sell-off? Market participants have already begun tightening their positions. In March this year, the Federal Deposit Insurance Corporation (FDIC) just threw out a harsh word, saying that your bank wants to get involved in crypto. Don't hesitate, just do it if you want. No need to ask for permission. In April, Switzerland was not willing to lag behind and stipulated that banks can custody tokenized securities, and even stablecoin issuers can legitimately support it. Trump is said to be busy too, and is thinking about signing an executive order to investigate the crypto industry and the bank discrimination that conservatives are shouting about every day. Looking at the US banking industry, even JP Morgan Chase has begun to study crypto-backed loans. It feels that this wave of traditional finance moving closer to crypto is blooming across the board. However, the camera turned, and the European Banking Authority (EBA), it still has the attitude of, "I'll watch you play, but I won't get involved." While the world is moving towards embracing encryption, it's like a stubborn old man from the last century, watching from the sidelines without any concrete action.
European Banking Authority (EBA), the draft technical standards for crypto regulation have been released, imposing strict risk weightings on banks holding cryptocurrencies. Unbacked crypto assets such as Bitcoin are classified as Group 2B, with a risk weight of up to 1,250%. Reference tokens pegged to traditional assets are classified as Group 1B, with a weight of 250%. The new regulations require detailed modeling and strict classification, clarifying that the risks of assets such as Bitcoin and Ethereum cannot be offset against each other. The relevant rules will be implemented in July 2024.
This draft has now been submitted to the European Commission, which will decide whether to allow it within the next 3 months. Bitcoin and Ethereum are immediately labeled highest risk. Simply put, any bank that dares to touch them will have to pay 12.5 for every $1 they buy. This isn't about encouraging banks to invest, it's about discouraging them from investing. For example, Italy's Intesa Sanpaolo Bank bought €1 million worth of BTC in January of this year, but now may have to reserve €12.5 million to maintain its position. Tech companies like Revolut have already learned the lesson, keeping their crypto operations off balance sheet, circumventing this wave of regulatory scrutiny and avoiding even a scratch. The market, upon seeing this, was filled with complaints. How can this be called regulation? It's clearly an attempt to scare traditional banks out of the crypto world.
U.S. government's $1 group purchase of ChatGPT. Should global governments learn from this? AI and mining machines compete for power? IREN, the boss, directly started a group discussion. Is Bitcoin mining competing with AI for a living?
IREN, the mining company mocked last year for its tax-free bragging, has now gone on a tear. Short-selling firm Culper Research slammed it, saying its high-performance computing efforts relied solely on lip service, and its hardware investment was pitifully small. The metaphor was even more pointed. It's like driving a Toyota Prius down the Monaco F1 circuit. The result? IREN, relying not on lip service but on its core mining business, has skyrocketed. In just 4 months, its stock price soared 227%, from $5.59 to $18.32, effectively slapping the shorts in the face.
In July, IREN mined 728 bitcoins, surpassing Mara, which has a higher hash rate, 703. Although IREN's deployed hash rate is 50 EH/s, lower than Mara's 58.9 EH/s, its average actual hash rate is 45.4 EH/s, indicating stable and efficient operation of the machines. Previous data from Mara showed that the mining machine operation rate was less than 75%.
It's all about power. It's the power story. And you're seeing hyperscale CapEx forecasts for AI growing 65-70% year on year, over $300 billion in 2025. And there just isn't enough power to fuel this appetite for AI demands, let alone Bitcoin.
IREN's stock price surged 11.4% on Wednesday, closing at $18.32. Its market capitalization soared to $4.11 billion, surpassing Riot and Core Scientific to become the world's second-largest Bitcoin miner after Mara.
IREN's total revenue in July reached $86 million, with its AI cloud business contributing $2.3 million, proving its commitment to diversification. Meanwhile, despite a slight setback in July, Mara still managed to maintain a 64% increase in Q2 revenue, reaching $238 million. With nearly 50,000 bitcoins, IREN holds a significant position, second only to Michael Saylor's strategy. Mining is becoming increasingly competitive, with energy consumption soaring. Without competing on equipment efficiency and reducing electricity costs, the game is unsustainable. IREN's continued success against Mara in this environment is no wonder the market is voting for it. On July 23rd, the White House personally presented a 28-page AI action plan, blaring the headline, The United States will be the king of artificial intelligence, and it will be unchallenged. This document isn't just talk. It lays out over 90 concrete policy actions, including a $1 trillion budget, mobilizing military giants, tech giants, and leading laboratories to build infrastructure, ease regulations, and attract investment. It's like a Star Wars for AI, with the United States leading the charge. Trump personally signed the document, passionately declaring, "We are going to win this technological race." It sounds like a 21st century Cold War declaration. This isn't just any policy, it's a major technological nuclear bomb initiative. Who dares not take it seriously?
Whether we like it or not, we're suddenly engaged in a fast-paced competition to build and define this groundbreaking technology that will determine so much about the future of civilization itself. America is the country that started the AI race, and as President of the United States, I'm here today to declare that America is going to win it. We're going to work hard, we're going to win it.
OpenAI announced a partnership with the U.S. General Services Administration (GSA) to roll out ChatGPT Enterprise to all federal executive departments next year. For a nominal fee of $1, participating agencies will gain access to OpenAI's flagship AI model. Officials stated that this initiative will support the implementation of President Trump's AI-powered government strategy.
The US's current wave of AI operations is like a game of technology chicken. While firing furiously with a $1 trillion budget, the US is also handing out $1 AI frying pans to every civil servant. The White House's 28-page AI action plan isn't a policy document. It's a clear manual for 21st century technological hegemony. The military-industrial complex handles the gunfighting, tech giants collect the spoils, and ChatGPT acts as the medic to replenish the US government's resources. Trump's slogans of "Good luck, America wins chicken" are actually playing a technological monopoly, aiming not only to win, but also to buy the board. Other countries are now caught in a dilemma. Follow suit. Their financial resources are insufficient. Fold. Simply switch to man-machine mode. This isn't an AI competition. It's a digital version of the Hunger Games, and the US is sending a participation, you agree to the terms, notice to the world.
Is determined to uphold its belief in decentralization to the end. In the early hours of the morning, they suddenly announced they would contribute another $500,000 to the Tornado Cash founders' legal battle. Standard Chartered Bank, together with Furin Group and HKT, formed a stablecoin iron triangle and officially knocked on the door of the Hong Kong Monetary Authority, stating, "We also want to grab a stablecoin license, don't forget to count us in." OpenAI is back with another hit. The super evolved version of GPT-5 has been released specifically for coding and writing. Not only does it write quickly, but it also writes accurately, making it a natural tool for programmers and writers. Pump.Fun has established a foundation called Glassful to begin providing support to ecosystem projects. The team says several projects have already received support, and they'll continue to invest. However, they haven't yet announced how the funds will be distributed, so we're keeping everyone's curiosity piqued. Vitalik Buterin has been a prophet again recently. While happily opening the Ethereum treasury to more investors, he also issued an urgent warning. Everyone, be careful. This could turn into a leveraged werewolf situation if things go wrong.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.